Another phenomenal educational video, guys. So this is going to be one of the most important videos. This is probably like going to be the foundation for everything that you learn from here on out, from maybe from your mentor or maybe from me or whoever, or any videos that come out. But before I get started, guys, for one, please subscribe to the video, and if you like the video, please like and comment on the video what you learned, or if you don't understand, ask a question and I'll answer it. But please just use a comment and share it, because I really would appreciate it. That's what's keeping me really just coming out this content, breaking down things so where you can understand them. You can also follow me on Instagram. You can also subscribe to my Facebook updates by clicking the link in my Instagram's bio. Subscribe to my Facebook update so anytime I come out with a new video, you will be notified. And I also have a website building tool that's just like similar to Wix, Shopify, and Squarespace. So if you need to build your website, marketing and branding and list building, definitely take advantage of it. It is free, and I would love for you to take advantage and give me your thoughts on that. Now, let's dive into the education, guys. So again, my name is Brandon Stringer. I'm a marketer and a trader based out in Atlanta with more than 5 to 10 years of experience. Follow me on everything as far as my brand. If you want to, you can just click these buttons. If you want to follow my personal page, it is at CEO Brandon. Now, what does it take, guys? I like to break things very simply down. Like in the last video, if you haven't watched went here yet, I would suggest starting here first before you watch this video. If you don't understand what a trend line is, support and resist, and candles for the most part, and if you didn't set your charts up correctly like how I did, because I'm going based off of if you already watched this first video. So let's get started. I do things in steps, guys. So the first thing I do is I look for the trend. The second thing I do, guys, is I draw support and resist. The third thing I do, guys, is I look for a candle entry. And the fourth thing I do, guys, is I manage my risk to reward based off of the stop loss and the take profit. So let's go over all four very quickly. I'm not going to take a lot of your time up. I feel like once you watch this video, it's going to give you clarity on market structure and when to enter your trade. So for those who don't understand candlesticks, I'll briefly go over that also. Like I said, I went over that in the previous video. But just to keep it simple, this daily candlestick, in order to see everything in this daily, you have to look at all the different candlesticks that make up this. Now, the same thing for the 1 hour. You want to zoom in even more. Each of these candlesticks equals 1 day. So these 6 equals 1 day. These 24 equals 1 day. And the same thing goes for 15 minutes, 5 minutes, and so on. So it's basically a way to zoom into the market. So we're going to go back to this chart to recognize a pattern soon. But let's go on to the first part. So the first thing, guys, is that we got to draw a trend line. A trend line is with two or more points meet. So you can see this point met and this point met. This is not how you draw your trend line. I see people with stuff like this on the internet, and I'm looking at them like, this looks super confusing, and no one wants to do Forex. You got your charts looking all crazy. I don't have my charts look nice and clean. I don't got a lot going on, and I just keep it very simple, guys. Like, I'm not saying the best trader in the world, but I'm pretty much one of the best people to just break down things simple, because I don't complicate things. I like to make things nice and simple. So how's the trend line drawn? 2 or more points. Next step, determining market structure. As you can see, we have our trend line. The second step is to figure out market structure. So as you can see, this the market moved up, created a trend line. Moved up, came back down for a third time. Really, maybe like the third or fourth time. But that's like, this is a very good point. You could have traded these two, and I see some good entries here. This is a really good entry. So this is how you know it's a really good entry. The reason it's a really good entry is because it broke the last high. So this was the high. This is the new high. Came back down and created and it came back down to the old support and resist. What do I mean by the old support and resist? When price came up here and kept tapping, this was resist. When price breaks resist and taps back on top, it is now considered a floor. Now, when price usually when the price taps on the floor, like a tennis ball, when the ball hits the ground, it bounces up. So a tennis ball broke through the ceiling, came to my top neighbor's house, bounced back down, came back up. Now I wouldn't have taken that trade. Well, I could have. That's a good trade too. But let me tell you what a really good trade is. When it bounced back down and it hit my old resist and my new support at the same time. And it hit my trend line at the same time. And it created a candlestick that we're about to go over at the same time. So the more confirmations you have, guys, the better the chance that trade is going to be. So let's talk about why this is a good candlestick next. The third step, guys, is figuring out the candlesticks. So we have bearish and engulfing candlesticks. We also have hammer candlesticks. So let's kind of talk. Anytime you see a bearish candlestick, which I'll show you how it looks. Where this is basically a bearish candlestick, that's indicating a sell. Anytime you see a bullish candlestick, that's indicating a buy. Anytime you see a hammer, for example, if it came all the way down and the hammer looked like this, and I'm going to tell you why this is important, then that tells a story. Same thing for this. It tells a story. So let's kind of talk about that. If you notice, in this example, the bears are winning. And we're going to use the bears as the Falcons, and we're going to use the bulls as the Giants. So the Giants are the bulls, the bears are the Falcons. So since the Falcons are the bears, the Falcons are winning right now. And then their key player, they have major momentum. Their key player broke their leg. Oh my God. And they started losing momentum. And it was such bad momentum that they stopped scoring at all. And the Bulls, which is the Giants, started scoring. And it came all the way up here. This is a good chance that the market is about to turn around. Why? Because the momentum just completely just stopped. No points had on that third quarter, or anything. And the same thing will happen as if it happened like this. But then let's say the opposite happens. Let's say that this hammer is turned around. This is how a hammer really looks, right? You grab the handle stick and you're knocking things and the screws and everything, right? So the Falcons, the Bears, had major momentum. But look at this. The Bears were doing very well. But the issue was that another player lost. They lost another player. And the Bears, they pushed it down. They were doing very well. And let's say this is third quarter. In this third quarter, this is a candlestick. Let's say this is the 4-hour candlestick. In these 4 hours, let's say the hour. In this 1 hour, a lot of stuff happened. They were doing good. And about midway into them losing, that's when they got all the way down here. And they were killing it. Dude was scoring. And then he had a tragic accident. And next thing you know, they started losing momentum. And the Giants start whooping their butt, right? And it closes above. Now, that indicates that the Bears are struggling, guys. The Falcons are struggling to keep momentum because they just lost their key players. So what does that tell us based off that candlestick? That there's a good chance the market's about to go up. Now, do you want to only trade candlesticks? Absolutely not. That'd just be silly. But based off of trends and market structure, the candlestick will determine a good entry point from a good situation as far as market structure. So let's give you an example. If you notice, the market that came all the way up here had major momentum. Shot down. What does this tell us in this 1 hour or this 4-hour story? That they were doing very well. Then they started losing momentum. So I just tell people, just talk to the candles. That's what I do. I said, okay, then they're doing really well, man. The Falcons they're doing. Oh, that's actually, you know what? The Falcons are winning, but now the Giants are doing their thing. It's going up. Remember, they're the Bears. It's going up. They came a little bit down. They came all the way up here. Then they came down. So then the Falcons are doing pretty well. And then we thought they were going to do good, but then they lost their key player, and we can tell they lost their key player. Why? Because even though we didn't see it, we heard it on the radio. We can hear it with our ears or with our eyes. If you look from here, as you see, they tried to push down, but the Bears already had. I mean, yeah, the Bears already had momentum. They were just starting to do well and balance everything out. They were almost there too. They were almost bound to balance everything out. But then they lost their key player and it created this huge wick. Meaning they got this far down the market, but within 4 hours, everything closed right here. So what does that tell us? That means it tells us, like, you know what? They tried to get it that far down, but within that third quarter, within 4 hours, it closed right here because they couldn't keep the momentum. Maybe they lost a player. Maybe they just got tired trying to catch up, whatever. So what does that tell us? That means that the Bears, who were already doing good anyway, not the Bears, the Bulls, which is the Giants, were already doing it anyway. There's a good chance it's about to revert, keep going in towards momentum. Just so it's basically telling your story and using market structure to make it make sense. Now, the fourth thing that you're going to do, guys, after you've recognized the candlestick, is you're going to figure out your take profit and stop loss. So we'll use this example. If you look at it, guys, we see there's a really good entry candlestick. There's a good market structure and so on. Now, let's say we took our entry right here. Where is our stop loss and our take profit going to be? Our stop loss is going to be below that last low. So it's a really tight stop loss. And our our take profit is going to be at our last resist. What was our last resist? We look to the left. This was our last resist. So there's a good chance when it comes back to this point, it's going to resist. So as you see, it came up, resisted, you took profit, you're out. And if you wanted to, you could have held it if you've seen another good resist and held it to take profit too. Just remember, the more resist you have to go through, the lower the chance of it getting there. It's like it's going through multiple brick walls just to get to where you wanted to go. So now let's look at the actual charts. So I already drew a trend line right here, right? This is multiple points going down. As you can see, overall trend is going down. It's a bit retracement, but let's kind of zoom into this area for now. So we have multiple points, and this is on the 4 hour. So I want to zoom in and see more details. So let's go into the 1 hour. So this is the 1 hour. This is more details. Step one was what? Find the trend. Which way is the market going? Down. So what we're looking for? A bearish market. We're looking for sales. What's next? We're looking for market structure. So let's just go and play this out and wait for market structure. So let's zoom in some more. And now if we look at it, that's the market structure, right? Here it goes, look. Horizontal line. This used to be support. Now it's resist. Very, very simple, right? Now we're looking for our entry. We got a lot of it actually right here too. Boom, support. We can just keep it from right here. Support, resist. Now we're looking for a candlestick. We're looking for an engulfing candle, bearish engulfing candlestick, or a bearish type of hammer. So as we can see, we zoom in. There goes our entry right there, right? So that's our entry. We figured our entry. Now we need to figure out where's our stop loss and take profit going to be. So we can make our stop loss based off of looking at the past. I would say our stop loss can be about right. It depends on how tight you want to be it. If you want to just be make it real tight, it can be right here. If you want to make it real tight, it's kind of a little tight for me. But if you want to just make it a little bit, sometimes I like to look at the higher time frames to figure out more. See how it would have just took me out maybe. So let's bring it up a little bit more. See, our take profit can be about right here. So now I want to look about right there. Now I want to look for my So I brought to a high time frame so I can see, because I want to have a pretty good trade. So let's look at each structure. Remember, we're trading so resist to resist. This is a support or resist area. So this is support. So just draw. That's what I mean. I take profit 1. Take profit 2. Can be about right here. Take profit 3 can be about some pretty good structure about right there. See those candlesticks? Take profit 4 can be about right here. Let's see how many pips that is. So we had took that trade, and let's say we came all the way about right here. This is a good 35 pips. If you kept holding it, if you want to hold for 50 pips, you could have did that, really, because it still hit market structure. But if you wanted to just be real safe, 35 pips in and out. You did $1, you made 35 bucks. You did $10, you made 350 bucks. So $10 per pip. And you learned that from the last video, you understand that. This one is about 70 pips for take profit 2. It's about 123. It's about 200 pips that you could have made if you had held it all the way. So well, we don't know. Let's see. Let's play it out. So let's look at the 1 hour. We got our stop loss. Let's just watch it. Make it go. Wait here. What happens? First of all, it's 2 things that happen. It hit our take profit 1, and it confirmed the momentum because of another bearish candlestick right on the trend. That momentum will continue. So take profit 2 almost got hit. Let's watch it. Let's see what take profit 2 hits. Take profit 2 hit. Okay, great. We already made 70 pips just that easily. Okay. Let's see if take profit 3 happens. Let's see if we hold it. That's what happens. And I wanted to make a point that I almost forgot to tell you guys. Oh, what happened? Oh, create another candlestick right on our new support and our new resist. Look, market structure, guys. Right here. It's old support, new resist, entry. Where did it go? Let's find out. Take profit 3. And let's say that you didn't even hold the trade. You bang out the trade and you was looking for another entry. This was the candlestick to get on. Now, I also want to teach you about the 50. The 50 acts as support and resist. So when the candles are under the 50, it's support. Resist. When the candles over the 50, it's a resist. So as you can see, when it came up here, this was another confirmation that it's under the 50. It's right on the 50. It's right on the trend line. It created a bearish. So that was a really good indication that it was going to go in the direction you wanted. And if we drew a Fibonacci, I guarantee you guys it would have been exactly where we wanted to go everywhere. So let's take our fib from. Oops. Let's take our fib. And you'll learn more about Fibonacci's in another video. I just wanted to see something, guys, for my own self. If I caught this trade when it came here and came up, this is the low. So draw it up. Guys, you could have found, look at this. It hit the level. It came up, hit the 618, came straight down to this level, to this level, to this level, and to this level. So that's another thing you can learn, guys, when you start learning Fibonacci. I got a video on that also you can check out. Hopefully this video will help, guys. One thing else I want to go talk about is the last part is determining your lot size. So let's say, for example, what was our stop loss? Our stop loss was about, we took a trade right here, that was an entry. Our stop loss was only 35 pips, 30 pips, for example. So I know that the most I can lose is 30 pips. So I don't base my lot size based off my profits. I base off my potential loss. So let's say that I have $1,000 account, and the most I want to lose is 30 bucks. That means I just do $1 per pip. If I want someone to lose $15, then I'll do 50 cents a pip. But the most I want to lose is is 60 bucks. I'll do $2 a pip. If I want to go hard and go home, and I say, you know what, I really like this trade, and I'm willing to risk $300 for it, I will do that. You know, it depends. You know, I don't recommend that unless you feel like you're really confident and you're really good at it, and that takes practice. Let's say that we did do that, and we did $10, and we're willing to risk. Let's say we had a $2,000 account, and we're willing to risk $300 of our $200 account. How much is that on one trade? It's kind of a lot, but let's just see what happens. 10. So about 11-12% of our account, right? So it's 12% of our account. It's kind of a big deal. Usually you want to risk 3% of your account. But let's say you did 12% of your account because you really believe in this trade, and you believe that if you had took this trade, you can take it all the way down to right here for 134 pips. So let's do $10 times 130 pips. You made $1,300. Your new account size went from $2,000 to $3,300 from one trade. So there are so many different setups, guys. You can do this strategy on any type of style. I recommend that you do at least practice 2 or 3 pairs. Euro USD is pretty easy. GBP, JPY. You can even do it NDC if you want. They move really, really fast. Crypto, everything. So all I ask for you guys to do for me is, for one, practice on demo and educate yourself. And subscribe to my channel. And leave a comment on the video and like it and share it with your friends. And turn your notifications on so you can get notified anytime I come out with a video. Also, if you want to support me, the best way to support me is to take advantage of my signal group for it's typically about $25 a month, and we send out high probable signals, and you can mark the charts up based off our education to find out why we took that trade and to see if you want to take that trade. Now, you can also, anytime we promote something like TradingView or Code Forex or whatever, make sure you use our affiliate link so we get the credit when you join, because it doesn't take anything out of you to join through our affiliate link. So just in case you put money in your broker account or you take advantage of a TradingView package, we get the credit. So thank you guys. Also, all we ask is support the channel, and we'll continue to bring you the value.